What's up traders, hope you all having an awesome weekend. So this weekend I'm going to teach you how you can trade the EMAs when the EMA crosses each other, which I get a lots of messages from traders that, Omar, shall we buy or sell when the EMA crosses each other? Let's say 50 EMA cross, 20 EMA, or maybe if you're using 10 EMA cross, 20 EMA, is that a buy or sell signal? Well, it can be, but with other confluences. So this is what I'm going to teach you in the first part of the video, and today I'm going to go through net gas, gold, silver and crude oil, and almost every single commodity is giving us some sort of valid signal to enter our trade, which I'm going to go through in a second part of the video. So hang in there if you want to listen this part of the video. Trust me guys, you will learn something today, how to take your trades when the EMA crosses each other, and I'm going to show you some of the trades which I've taken with that confluence, and also I'm going to show you the trades we have entered from this area of value, and one indices which is Nasdaq trade I've sent to the members. I'm going to show you that as well. In trading, it is very important to have your rules there, because if you have your set in stone rules there, if you follow that every single time, then the chances of becoming a profitable trader will increase dramatically. If you have no rules there, you just sell at the top or buy at the bottom, then it is just a guess but nothing more. You can do that, but if you have an added confluence with that, then trust me, your games of trade will go towards the other level. So let's jump on to this pair right here. I'm going to teach you how you can trade the EMAs when it crosses each other. Now, I got lots of questions that shall we enter the trade right when the EMA cross each other? Now, let me tell you the confluence I look when the EMA cross each other. Let's go back in a replay mode, and I'm going to show you the cons of that if you just enter blindly. So let's go back in a replay mode. Right. So at this point, EMA is about to cross. So in my case, I use 20 EMA and 50 EMA. So if 20 EMA crosses 50 EMA, it means the faster moving average is crossing the slower moving average. That is one of the bullish condition, and opposite is true. So I'm going to show you what happens if you enter the trade right when the EMA cross. So in my case, it's 20 EMA. I'm going to move the market forward. Right here, it still did not cross. Right here. Now, we have a cross right here, as you can see, the 20 EMA crossed 50 EMA. Now, the mistake the traders do, they quickly enter the buy trade. I just want to show you this scenario so that you can understand how you can avoid this mistake and exit your trade once you see a lots of loss coming in and then the price shoots up. Now, this is the confluence number one, that the 20 EMA crosses 50 EMA. Now, I won't be buying here. I want to see the other factors as well. The other factor I want to see some sort of bullish pressure. So the confluence number one, the EMA just crossed 20 EMA crosses 50 EMA. The confluence number two, price is now trading above 50 EMA. So I have two technical factors that has passed my checklist. So what is the third factor I need to see? The third factor, we need to see some sort of bullish pressure. And if you would have entered right at the cross, I want to show you what would have happened to your psychology. It will mess up with your head. Let's say you have entered your buy trade right here, and now you set your take profit and you set your stop loss. Now in this case, you will see, let's move the market forward right here. Now, when the price was here, you might be panicking and you might exit your trade because this move was around 27 pips. So you might get panicked, and that can cause lots of stress. But in my case, what I would do, I would still wait for my third confluence, third factor, which is I want to see a bullish pressure. And what is that? Let me show you. Now, did you see that move? It pushes down till here. Now imagine you are in the trade right at the cross. That would be a moment of panic, and then let's say you cut your trade here and then price quickly shoots up. I know that happens to lots of traders. What happens is when the price pushes up after you cut your losses, you start cursing yourself that why did I exit this trade? Now for me, the checklist number one, the EMA just crossed 50 EMA. Checklist number two, the price is above 50 EMA. That's fine. I would just want to look for buy trades. Now, checklist number three. It is my bullish confirmation. What is that? A swing low bullish engulfing candle. Now, I have this candle. We have the cross. We have the price that is trading above 50 and 20 EMA. I have three technical confluences that is enough for me to enter this trade, and now we enter a trade right here. And if you see with that, we know that we are not guessing in the market. We enter the trade by following all the rules, and now if the stop loss is hit, that's totally cool, because if you have tested the strategy, it is more likely that out of 10 times you have 6 winners. And of course, if you manage your risk, that will give you better reward to risk ratio. So if you see here, let's move the market, and very next candle hit the take profit of 71 pips. How easy is that? If if you follow the rules. We don't have to be in the trade all the time. Remember that. Look for these confluences. Signal happens with patience. I know when the market opens, you all are excited and you just want to be in the trade and be in something just for a thrill. But if you have your hard-earned money here, trust me guys, if you lose your money, that is a shitty feeling and you don't want that. So make sure you have your rules there and then you enter the trade. So the second one I want to show you very quickly here. What do we have right here? As you can see, we had a cross. With that, we had a bullish engulfer. Every single confluence met and that is good to go long and that has hit our target. So that is what I want to show you. If you trade the crosses 50 and 20 EMA, make sure at least have 3 technical confluences there. And if you follow your rules, make sure you stick with those rules all the time and do not change your strategy if you have a losing streak. Otherwise, you will just go in circles and try to find new strategy and you will end up leaving trading. So have your strategy there, stick with your rules. If you do that, trust me guys, you can make it in trading world. Now, I want to show you very quickly a trade we took in the priority group. And by the way, this group is not a signal group. I teach you the entry patterns like this. I send you these zones every week for commodities, for forex, for indices, all of them, so that you know that you are not entering your trades blindly. When the price hit the zone, you look for some sort of signal to enter your trade. Otherwise, if you don't know, you have no idea about these zones, you are not sure where to enter your counter trades. But once you receive the report from me every week, you know that if the price is in trading in between the zones, you are looking for the pullback trades. If the price hit the zone above, you are looking for the counter trades. And I have the other strategy which I teach my MMTA full course student. That is something I can't explain in my single video. I have full course for that. If you want to check that out, it's on my website moneymarkets.uk. So let's look at this trade I have sent to the priority member. Now, why did I enter this trade? Now, the answer is not because the price hit the area of value. And let me show you that in a replay mode again. So when the price was here, I was looking for my buy opportunities only, because I've already sent these zones to my members. I've already informed that we are going to look for buy trades once the price hit the zone and only with the entry condition. Now, I know that this zone is a major area of value. As you can see, the price has recently pushed up from here. That is why I was paying attention to this zone to enter my trade. Now, the confluence number 1, the price hit my area of value and that is not enough for me to enter the trade. I want to see the other technical factor. What is that? The other technical factor is price is now making new lower lows. And what do we have here in the RSI? In the RSI, price is making higher lows. So we have a divergence in the RSI. So that is the technical factor number 2. What is the technical factor number 3? The technical factor number 3 is I want to see some sort of bullish condition. And what is that? It is one of my bullish condition. Right here, we have this bullish engulfing pattern. So all 3 technical factors has met my criteria to enter this trade. And now if it hit my stop loss, I will not curse myself because I followed all my rules to enter this trade. We set the stops and targets and we had a price that consolidated for some time. That is a pain, but eventually if you see the price pushed up, hitting our take profit easily. So that is what I want to show you, how you can enter the trades with confluence. So the last one I want to show you, one of the indices trade, this is Nasdaq. I have already sent these zones to my members and told them to look for sell trades only. Now, if there is no sell condition here, are we going to enter the trade? No, we are not going to enter the trade because we never know the price will break above with full bullish momentum and just by seeing the price is now in the area of value start selling. No, we are not going to do that. But what the technical factors we are seeing? Technical factor number 1, the price is in the area of value. The technical factor number 2, we have the overbought situation in the RSI, which is good. Now, I want to see some sort of bearish pressure to enter the trade. What is that? Let's push the market forward. Do we have a bearish candle here? An engulfing candle, which is a swing high bearish engulfing candle. Now, the way I enter my trades with full stops and target, I can't tell the exact rules here on my single video, this is something you will learn in my full course if you wish to. Now, I've set my target, which is 1.4 to 1 risk to reward ratio, and I have my target set accordingly. Now, I know that if it's a forex pair, I would have managed it till 50 EMA, but as indices and commodities are a bit risky, I sometimes keep 1-to-1 or just use fixed target of 1.4 to 1 risk to reward ratio. So we have a position set, and if you see the price pushed down nicely, hitting our take profit easily and breaks below 50 EMA as well. So that is how we enter the trade. Signal does not happen instantly. You need to look for this factor. Now, the way I showed this video, that looks to you very easy. Trust me guys, these are the 4-hour candles. If you trade on smaller candles, then follow the exact rules. But if you are a swing trader like me, this trade I've just shown you has given us some pain. And if you see 1, 2, 3, 4, 5, 6, 7, 8, 9 4-hour candles, we have to wait and we need to be patient. We were in the profit once, twice, and there are traders that get scared and just quickly exit their trade in a fear that they will lose all their money. But if you have your tested strategy, if you have tested that strategy, then trust me guys, there is no need to be scared. You know that out of 10 times, you have that edge in the market to come out as a profitable trader in the end. So that is what I want to show you. I hope you got a value out of that. If yes, do not forget to hit a like button for me. And if you're new, hit a subscribe button so that you can all trade together and trade efficiently. So let's start our analysis, starting with natural gas, gold, silver, and crude oil. Right here, what do we have? As you can see, the price has now broken above the minor area of value that I've removed in my last video, but just for my analysis, I've just put that back here again. At this point, I've clearly said that I'll be only looking for my buy trades with a pullback. And let me show you what I've said in my last video so that you understand the way I do my analysis and how I enter my trades. For now, we are just buying. We are not selling natural gas. So all I want to see, we can get a possible pullback of few red candles now, a breather out of natural gas, and then a formation of bullish engulfer. Once we have that, we are good to go long, and targets will be 180. So look for that. We are only taking buy trades. Okay, nice one. So what do we have right here? Exactly as we expected. So price broke above this previous zone right here. We know that we are in a bullish momentum. Price is trading above 50 EMA. That is totally fine. That is also going with our technical confluence. Now we had a pullback back to the area of value, back to the previous resistance that has now been broken. This will now act as a level of support. So what do we have? The technical factor number 3. We have a nice bullish engulfing candle. So all these rules are met. Now that is exactly your buy signal here. And if you are trading, you can always use 1 ATR for your target. ATR of this candle is 3.5. So initial targets will be 3.5, something like this. So initial targets will be like that. But if you want to be extra cautious, you can always keep your stop loss below 20 EMA and below this zone, and then go 1-to-1 risk to reward ratio, or you can just keep 1 ATR target and then manage it to the second target. So that is how I will enter my trade. Let's see how the price opens. If it opens in gap up massively, then I will wait for the pullback to enter my trade. If it won't open in gap up, let's say if it opens gap down, then in that case we have a better reward to risk ratio. We can enter a little bit below and go 1-to-1 and then adjust our target. So that is what I will be looking at for net gas. We have a valid buy signal and I'm expecting a price to push up from here. Now the next zone, that is a new zone. If you still don't have these zones on your charts right here, so I've just readjusted these zones. This is 2.760 goes up to 2.848, a zone from where we can get a possible pullback or a push down. So have these zones on your chart. I've just redone the zone. If you see, this zone has acted as a good level of support, resistance. So that is what I'm looking at. Price can likely push up from here, hitting the zone above, and then we can get a reason to enter inside this zone anywhere with double tops or bearish engulfing patterns. So that is what I'm looking at. Have these zones on the charts. Once the price hit the zone, we are good to go short. Right here on capital.com. Now if you're trading on this platform, have these zones on the chart, exactly the same conditions, bullish engulfer, and price will likely push up. Have the zone here. It is 2.884 goes up to 3.001, a zone from where we're going to enter our sell trades only. So have these zones on the charts. Once we have a condition of sell trade from this zone, we're going to enter our sell trade. For now, I can see a nice push up out of natural gas. Right here, next one we have gold. So gold is now pushing up and now we are in a process of a pullback and price has stalled at 50 EMA. So as you can see, we had a nice 382 candle that shows a bullish pressure. Let's see if it's a valid 382 candle. It is a valid 382 candle. So looking at that, I'm now expecting a push up out of gold. I'm not entering any sort of sell trades unless and until the price breaks below 50 EMAs. For now, this is a bullish pressure. It is not a bullish condition the way I take my trades, but that shows a bullish pressure and we can get a possible push up from here. And if the price continues to push up, the next zone to enter your sell trades, I've just removed the minor area, so I'll be looking at this zone above, which is 2034.82. that goes up to 2052.85. I'll be only entering my sell trade if the price pushes up dramatically or if breaks below 50 and 20 EMA. For now, I'll just look for buy trades only, not selling gold at this point. Once the price breaks above this previous high, we can get a possible pullback and price will continue to push up in a trend, and this level will become a level of support that was previously a resistance. So keep an eye here. I only look for buy conditions for gold. Next one, we have silver. Silver is now pushing back to the level of trend continuation zone. We can get a very good signal here, a possible buy signal that can be next bullish engulfing candle. Once we have that, we have a very likely chance that silver will push up and continue to push up till 25.86, goes up to 26.39, from where we're going to enter our sell trade. For now, the zone below is 24.02, goes up to 24.60, and I'm only looking for buy trades for silver. As long as we are above 50 and 20 EMA, I'm not entering any sell trade. So keep an eye here for sell conditions. Last one, we have crude oil. A very nice push up here on crude oil, and we had an exact move I've mentioned in my last video. Let me show you what I've said so that we can understand the conditions nicely. I'm patiently waiting for a double top confirmation. Once the price hit the zone above, forms a double top pattern, we are good to go short. I'm also paying attention to a double top here, although that would be a very good entry here. Now if we have no condition here, price forms pull back to the zone, then in that case we have a very good condition of double top on 4 hour and even on 1 hour, on daily time frame as well. So have these zones on your charts. Once we have a conditions, we are good to go short. Awesome. So what do we have? We did not get any sort of bearish condition right here, no bearish engulfer, but we had a nice double top confirmation, bearish pressure, and now I'm expecting a good push down from here. So if you are trading crude oil, you can keep your stop loss above this rejection zone, take profit maybe above 50 EMA, or you can go 1-to-1 first. The ATR of this candle right here at 6.9, so we can go 1-to-1, we can go more than $1. For now, if you are trading double tops, double bottom, I'm expecting a $1 push down out of crude oil, and it can still hit 50 EMA before it can push up. So I'm expecting a good push down, looking at this nice rejection number 1, rejection number 2 with the bearish pressure. We had a nice divergence in the RSI as well, price making higher highs, and we had a divergence that is making lower highs. So that is what I'm looking at for commodities next week. Hope you got a value out of that. If yes, hit a like button for me. It really helps me in the YouTube algorithm. If you have any questions, any confusions, you can always DM me on Instagram. I'll get back to ASAP. Hope you trade green and have an awesome weekend. See you guys in the next video. Till then, take care.